All right, here we are. So in the last video, as we all know, we went over the advanced cycle. Now I'm going to take these and put them into a more comprehensive kind of just image so you guys can print it out and have access to it for yourselves. It'll be in the mentorship and in the community. So you'll just be able to access it so it's easier. But fundamentally, and I really want this to be understood before we continue, fundamentally, every single trade that I personally take is based on exactly this, right? It's not additional guesswork. It's not insane concepts that you have to get on the deepest of levels. Yes, we worked our way up to understanding why this functions so powerfully, why this within the entry cycle functions so powerfully. And this has a lot to do with things we've spoken about before, stage 1 and 2, and the general delivery of price, demand validation, how demand is created, how demand comes into the market, how sellers get taken out for new demand to come in, for accumulation to happen, right? That was all the basis for coming to an understanding that ultimately most of what I'm doing in the market entirely is this. I'm understanding and asking myself where I am in a certain move. And I'm doing that across a V and a C, oftentimes, maybe more, but oftentimes a V and a C in terms of a time frame I want to trade. So let's say I want to trade the 65-minute E, which is generally the way that I currently operate, then I know my V and C is generally going to be a daily and a weekly. So what I do is I basically ultimately, like, my entire thing that I do as a trader is I look for the clearest moves that are holding up the not just because they make a move and come to an MA, but I'm looking for the cleanest moves that are moving higher, doing so on potential strength, or coming down very beautifully, not with major selling or anything like that. And we'll talk about examples of that in the future. And you'll see examples of that in webinars as we talk about actual trades that I personally take or have taken or have skipped, right? Because ultimately what I'm doing is I'm looking for the best possible move across anything and everything. And what I'm going to do is I'm going to continue to stalk and watch market after market after market and screen market after market after market and look through name after name until I find something that's delivering in a way like this. And if it is, then I'm going to try and participate in the trend through the momentum MBs that are forming, or as something fails, which is oftentimes something that's going to happen, and re-picks itself back up through the exact same steps and starts a new potential momentum MB move. So this is right here is a great example. Because remember, the way I teach is I try to show you example in reference to the conceptual, because this right here is technically conceptual. Now it's not, because if you go and apply it, you'll see that every market actually does move like this. And this is consistently what markets do. But the drawing itself is conceptual. So what you'll have is you'll have moves that are actually really good and then do break down and they start distributing and they potentially don't become good again. But then what you also have is moves that go through that stage 1, the longer term stage 1, right? Draw it the best way you can, go through like a longer term stage 1, come out of that for the accumulation MB and continue making beautiful moves because the move is proven to be a good one before. Now I want to show you a great example of this because, it's one thing just to say that this can happen. It's another thing to show you. But one of these examples that's very good is NVIDIA. Right, this is a move I've traded multiple times now. I've continued to watch it. What I'm going to do is I'll just hide everything for now, so it's not in the way. Let's just do this. What's going on here? Here we are. So we'll just hide everything so it's not in the way. And let's talk about NVIDIA just for a second here. So on the weekly, right, which is basically my context, my highest time frame, let's envision the start of the NVIDIA. Like, let's say this all broke down, right, and then price started maybe making a stage 1 here. So you might have started to look for or think about price coming out of this for an accumulation, never comes out. So you just wait and wait. Maybe you're thinking of this as stage 1 or something. And finally, price kind of comes out of that stage 1. We could probably say on this candle here, maybe on this candle here, right? So I think a lot of us, as we look at this, can agree that on a much higher time frame, just from a standpoint of where is there a potential accumulation MB, this is a stage 1 being validated as price comes out of the 10 and 20 MA, kind of comes higher out of whatever range or whatever sideways action it was inside of, right? So again, if I draw stage 1, right, if I just draw my best stage 1, right, this candle here defines the first point where we come out of that potential stage 1. Now, some of you might have drawn it like this. Again, I have preferences for how I draw the things I draw, and you'll see examples of that and labels of that. So some of you might have looked at this candle, right? So again, that's why I kind of drew it here. It's just, this can become a little bit more preference, but for me, this is kind of that area. If we get above it, I'm very much more likely to look for continuation on the top side. Now, let's particularly zoom in and understand what happened here, and then do it in tandem to this right here, which is the true full cycle of how things deliver, which is sometimes, as you guys know, and actually most of the time, you start delivering in MMBs and price might even just break down, or maybe it starts making another and then it breaks down. And then it goes through maybe a full cycle, right? Because most of the time, prices are not meant to actually go through all the momentum MBs. And sometimes, we all know it can make even more, but it's not meant to do this most of the time, right? The only things that are meant to do this are the things that are super, super powerful, super, super clean, things that are just going to make like the best trending moves, right? We as traders are going to try to seek out, because that's what we do. We are hunters, right? We hunt out the best possible potential movers and we try to get behind them, but we have no guarantee that we're going to get all these momentum MB deliveries. So that's something to remember, which is why we can go 1, 2, maybe sometimes we do 1 and then we break down, but then we re-break up and something becomes really, really clean. Here we are. So, on the weekly, which is my context time frame, at this point, I would say you are probably in a good spot to consider long. So what I'll do is I'll just draw a blue line here so we know where that is, and I'll step down into the daily to really showcase this thing that I'm trying to explain to you guys, right? So with that in mind, as price is literally up here, right, on this closure, when we look at this, it already has preset for us a underlying cycle. And the funny part about this cycle here is that it kind of matches this area right here where you had a cycle start, even though you might have not traded this area because it wasn't clear on your context time frame. Price then broke down to distribute. So if I start to label and break a few things down here, right, kind of comes out of a stage 1, maybe somewhere around there. Again, it doesn't have to be perfect, but kind of around there. Maybe goes through a momentum MB kind of here. I probably count this one as the same one. This could be momentum MB2. This is probably momentum MB3. And then as, again, 4 began to form, it just broke down and went into, right? So this stage 1 up here, if you try to draw like the best version of a stage 1, clearly broke down somewhere around here, maybe a little bit lower, maybe somewhere here. It's just preference. Went into a distribution MB, right? It started the breakdowns on the downside, MMB1, potential MMB2, right? That's what's forming to make that continuation down. But remember, we're thinking about this in the weekly. So again, I'm labeling out what's going on with this move. But what we've done is we're actually right here in that move, right? And what happens is when we start looking here, the story already being told by this market is one of, well, potential continuation, right? So we have the accumulation MB, maybe we have the momentum MB1 here, this could be the momentum MB2 here, and all of a sudden when we look at price and we start looking at price around this point here, which is exactly where that blue line is, maybe even as price is above it, already the thought process, because remember, when we're looking at this, it's at the end of that week, right? So as this week ends, right, that's when we're potentially looking at it because it's finally come out of that. So on the daily, right, it's when this week ends, so it's actually up here, and then the next one starts. So basically we're like right about here. So we know when we look at this already, even though we might have not traded any of this action, the story being told by the V cycle in confluence with the context cycle in terms of where it is now is putting in a phenomenal story for continuation. And all of a sudden what we notice is we're somewhere here or here in the cycle, which means that we are clearly set for more momentum MBs to continue, right? And then we get a momentum MB here with the cheat code rule of 5, right? Beautiful move higher. Then it comes a little bit lower, and that's fine. Probably stops you out of whatever trades you were in here. Go sideways, and this probably is your MMB3. So again, same exact thing. Your MMB3, and price goes into a very nice move, maybe an MMB4, but I would probably say this is also MMB3, so I'd wait here. Price moves higher, then pauses to probably MMB4 now. So again, same thing where you now expect this to probably be the last move, or we might be able to shift everything over, right? Price starts moving higher, and then it actually breaks down. So you can see it kind of starts a move, re-breaks lower, kind of under this little stage 1, right? So again, if you think of 1, 2, 1, 2, 1, 2, 1, this little break right here, just that candle alone, is enough for me to potentially reset the count here. So what we've done is we're creating one of these moments right here. There we are. We're creating one of those moments right there on this candle. And what does that mean, right? That's exactly this. This is the conceptual or the image put into life, put to life, so you can see how distributions or as prices break down are actually in many cases for the purpose of continuation or for reaccumulation. And we do that through lining up the overall cycle of delivery, and then we wait for our opportunity, right? So then as that happens, you can get this MMB1, which I'd probably wait for, right? This is a beautiful MMB1. So now I'd be already stalking for longs, right? Because I would expect it to keep moving higher now. And you can see this is a market that does that, right? MMB1, this is all MMB1, makes it move higher, MMB2, right? Makes a move higher, MMB2 or MMB3, makes a move higher, MMB4 or MMB3, probably still 3. So I'd wait for another move higher, right? Still looks good. Kind of breaks down. So this could also be a reset. And now you'd wait for a new move, and all of a sudden it's reset. So now the idea is it should continue making new moves. MMB1, look for a move continue higher. Still 1, look for higher. Beautiful. MMB2, look for higher, right? And then you get a crazy move. MMB3, move higher. MMB3 or 4, right? Goes a little bit choppy. I'd probably ignore this action at some point, but then this could be 4 up here, maybe one more move. Nope, and then fails down. And again, at this point, because of the underlying story of this failure could be a lead into continuation. And I actually traded this move after all of this. I actually didn't trade a lot of this. I think I started trading somewhere around here again on NVIDIA specifically. I don't remember if I traded that. Started another crazy move, broke down, then I definitely traded here. These are examples directly from the portal. You guys have seen me talk about this example here and this specific MMB. So, MMB1, maybe MMB2, maybe 2 or 3, right? I spoke about these examples multiple times, 4 or 3, 4 or 3, and then we can move over and then it breaks down. So this is something that I actually traded. And it was based on that exact same concept. And again, a delivering market or market that has proven to be really good is the same kind of market that then can repeat and go through really, really clean cycles. So ultimately, my entire system, right, is simply rooted in looking for not some insane conceptual thing that's going to break the minds of anyone that does it, but is simply looking for trend-based analysis, looking for trend-based moves, understanding them across a few timeframes, and then taking advantage of the ones that actually set up in terms of what I'm looking for. And this whole talk is going to segue into entries advanced in a second. But ultimately, right, my whole system is looking for this cycle to play out if it's the cleanest market where it goes through the 1, 2, 3, 4 and then breaks down. And if it does that on some nature, usually it won't. It'll do something like this, like we just saw on NVIDIA as the example, because I have an example that has gone through multiple of these, right, where prices start their moves, break down, re-go, start a move, break down, potentially re-go or fail down for a while and then restart. And that's based on your EVC being aligned, mainly the VNC, because these are the momentum cycle-based ones. Right, and then once I've basically chosen, because that's what I'm doing as a trader, right? I'm choosing that one of these areas probably looks clean enough for me to consider longs, for me to continue on longs. Just like you saw me a second ago talk about this NVIDIA move over and over again and say something like, I'd be watching, I'd be happy to go long, I'd be happy to go long. These are perfect MMBs, happy to go long. Probably would ignore, happy to go long, right? Probably would ignore, wait and wait and wait and wait. And maybe happy to go long here, and then wait and wait. Happy to go long, right? When you saw me kind of do that just now, that's me establishing where I'm willing to continue the analysis, right? Because something that I need you to remember, as I've gone over a few times now, is that the analysis does not equal profitability, right? And this is really important because, again, people get caught up in the fact that their analysis is correct or their analysis is wrong, when this does not matter if it means you're not taking trades, right? So again, this mini portal material piece is a little bit different than the stuff you've seen already. This is a little bit of a psychological kind of put together where it shows you and explains to you my system, why you've learned what you've learned so far, but also breaks down important elements of your analysis. Because again, most traders are stuck thinking this is the case, when in reality, right, my analysis most of the time, just so you guys understand this, my analysis on anything, technically 90% of the time, is going to be wrong. The only difference is that 90% of that time, I probably take a trade, 2% of the time, and that ends up being fully wrong, right? And then 10% of the time, my analysis is right? My analysis is completely right, and then you have something like maybe 20% of the time, it actually makes me money, right? So you can go through this step by step, but what happens is you start to realize that analysis doesn't mean anything, right? Because analysis as its own concept, ultimately, right, is this. Watch this, guys. Ready? I'm gonna break your mind here. Here's analysis in a nutshell. I click on something, right? I look at it in that moment, and I say, let's just say price was, here, or let's just say price was here, right? If I look at this right now, my analysis is going to say this is probably going to go up, right? Because based on the overall move, it could go up. Now, if that doesn't happen, or like maybe here, right? It's going to go up and it's going to continue up. That's an analysis-based play. But then if it breaks down, this doesn't matter because it doesn't necessarily mean that the wrongful analysis is leading to actual bad trades, which is very, very important because analysis does not equal profitability in any way. It's about how you actually execute on the analysis as it plays, which is very, very vital because, again, I can mark up and I can label thousands of markets every single day if I want to. I can label hundreds of markets, hundreds of labels, and the labels could all turn out to be wrong. The market could do completely something else, and I could still lose zero money or, in some instances, even make a little bit of money. This is because trading is not a game of analysis, right? Trading actually is a game of analysis plus the entry from the analysis plus the management of the entry of the analysis. That three-step process is like that barricade that keeps you from just randomly losing money constantly, which a lot of traders do. A lot of traders decide on something, right? They just buy as much of it as they can because they're like, shit, it's going to make the move without me. And then they lose. So again, my system is simple. I look for these things to play out, and when they're not playing out, it doesn't mean I'm doing something wrong. I am wrong about my analysis most of the time. It's just that when I'm right about the analysis on specific markets, like Bitcoin, and if you're watching this in the future, like Bitcoin in 2024, like Bitcoin during the few years that led to 2024, like Nvidia during these times, like Tesla during these times, like any of these other trades that I've traded, like MSTR during these times, right? Like there's specific moments in time that turned out to be so correct that when I took the entry and I managed the entry, it led to overall profitability, even though I was overall wrong. And these are the things that end up mattering and the things that you end up studying and seeing and learning from, because the other stuff just became useless to start with. And what's cool is, as we have a basically a blueprint to decide if something is worth trading or not, and then we move that to, again, something else that's somewhat simple in terms of the entry cycle, in terms of what's happening inside of it, we again have those barricades to actually taking an action based on what's happening. So if we go inside of something and we see the fundamental rules of what we look for happening, then we have the excuse or the potential to take an entry on something. And that's the beauty of trading in itself, right? That's what real edge is. That's what you start to learn as you get much, much better at this, right? You start realizing it's not about being right or wrong. And the people doing that online are like wasting time and doing terribly for themselves because, again, they're stuck in the wrong mindset, and they're buying mentorships and courses from people that don't even understand edge and are teaching them to be right, but it doesn't mean anything because it doesn't lead to profitability. Instead of understanding that waiting to be right out of analysis and then letting that analysis lead to an entry and letting that entry lead to the management, all the things that you're learning to do here through your studying, through your data collection, that's what's going to lead to true edge. And then you can go and you can hunt for these things and wait for these things to happen over and over and over again. Let everything be wrong and let even one market in a year be good, even though it's going to be a lot more than that. But let one market in a year be good, get positioned behind it, and you're going to exceed the returns of all your peers, of all the people you've studied amongst, of all the people you've seen online, all this nonsense, because you're going to have a real edge you can rely on, which is very, very powerful. So my system ultimately, right, is very, very simple. I'm using this cycle and I'm waiting for that cycle to deliver to trade. As that cycle plays, or as a moment is defined as something that is worth potentially trading for the analysis as it's playing out, right, I look for this right here. I ultimately study and look for those flushes to lead into those stage twos to lead into new flushes, those flushes to lead to new accumulation-based MBs that could lead to opportunities and entries through these points to continue potential moves. And then from there comes the management, right? And to close this one out, I'll do another mini example of something that I've recently traded, just to keep your head in the game of thinking over the same thing. Tesla, I think I spoke about this one with you guys throughout this portal material too, over the multiple times that I've tried to trade it and everything. Let's again just kind of get rid of everything here for a second. I don't want to actually, here we go. I don't know how to do it. It's fine. It doesn't matter. But ultimately, right, this accumulation MB happened from here. Same exact thing within the higher time frame weekly. So again, same thing happened off the weekly. The weekly started to accumulate, potentially put in those momentum MBs. Then the daily started to reciprocate. So the C and the V started to move together. The V led to the stage 1 breakout, which is the accumulation MB. That led to a second accumulation MB, as we call the MMB, because it's a V time frame. MMB1 led to the move higher. MMB2 led to a move higher that I tried, that I wanted to position on, but it just didn't give me what I needed, which led to another MMB2, which was really clean. Same exact rules. Selling comes in. The selling is not huge. The selling is supported by buying at the rising averages. And simply, last week on Friday, right, I jumped inside of this exact moment, took a look at what was happening here. And what was happening is we built the accumulation MBs, and those accumulation MBs were worth the overall steps, right? So the momentum cycles across the V and the C, the fact that this exact kind of thing is playing out on something that looks really clean, that looks really good, in reference to what I've studied, what I've learned for myself about markets, and what they should look like in terms of the examples and case studies I've done, that led to this exact application of delivery, where prices are going through, as we all know and love now, right? The major flush is the one that creates basically the accumulation MB. That's the major flush. That creates your anticipation of the higher lows and all the stuff that you learned prior. That creates your stage 1. That leads into that stage 2. That creates your next stage 1. That creates your next stage 2. That creates your next stage 1. That creates your next stage 2, which we already understand as well. So we get that major flush. That leads to that stage 2. That leads into a normal flush. So that's the normal thing here. The major flush is the one that starts the accumulation MBs. Then you get your moves. Those flushes come to usually the 10 or 20, the 10, 20 or just under the 20, sometimes on a little bit further under the 20, like this right here. We never know because, again, each move is a snowflake of itself. We just look for that demand. We look for the clarity in the way the move is presented, right? Accumulation MBs build up. Price starts another stage 2. Price goes through another flush, starts building up the same thing. Kind of builds up a little something here. I was looking at something here, but would have been maybe a break even. Reflushes out, builds up the same thing, get behind the entry, and all of a sudden you once again have a crazy mover that comes down to management, right? And although every piece of analysis might have been wrong across other markets, when the analysis of this market started to play out, and the analysis led to an entry cycle setup, and the entry cycle led to the actual entry, and that entry led to management, well, all of a sudden we start to see profitability, or we start to see positive edge on the fact that we're following rules. This is the beauty, the absolute beauty of trading. Once you start understanding this and getting this down, it's going to transform the way that you personally think about trading. Always, right? That's just how it's going to work. And that's another example of the cycle advance or the cycle delivery just being used, like very, very recently. And then from there comes the management of that move. And it happens the exact same way. So now that we have this kind of set, and now that you have a kind of a better understanding of the cycle advance, but also the fact that everything you've done so far has basically created a full understanding of how markets operate without any other bullshit, right? Just understanding that this is the general way that markets have delivered and still will deliver, have delivered for the last, 150, 200 years. This hasn't changed. You can go back and check it out. And I kind of showed you a little bit of that within the portal material as we've been working through it. So now that we have that, we can talk about entries on a little bit more of an advanced scale because, again, right, well, you can already tell each entry that might be taken is not the same kind of entry. Some of them look a little bit different. Some of them are in different areas. And let's talk about that next. All right.